Welcome back, guys, and thank you for tuning in again. The support is greatly appreciated. I promise to deliver only the most important information and advice as I possibly can. Today, I'm going to be talking about some of the most important guidelines that will drastically improve your trading result. The information that I will be about to share with you guys are all points that I have sat down and wholeheartedly thought about, and these are all things that I personally wish I knew when I started trading. Now let's get stuck into it. If you're struggling financially, even in the slightest, do not start trading yet. In my last video, we briefly went over money psychology and the negative effects that it can have on our mindset in trading. If you start trading with the sole purpose of needing to make money, you are setting yourself up for failure really quickly. You will be operating from a state of desperation rather than having a true desire of learning the actual skill set. When humans are desperate, we can do some crazy things, and this will all be visible in your trading results. Here's one tip and one piece of advice that I wish I knew before I started my first live trading account. You need to assume that the money is already lost, rather than having or making plans to double or triple your trading account, which is pure gambling mentality. You need to not care about the money and have zero attachments. Now, this is easier said than done, but it's the absolute truth. As I already mentioned, this is probably the one of the most major key concepts that I wish I knew when I started my trading career. It would have saved me so much pain and unnecessary financial losses. Now, if this means you have to continue working your job for an extra year, 2 years, or even 3 years, then so be it. It might suck in the long term, but believe me, when you have more cash in your reserve, it will be much easier to have than having a small reserve of capital, or even worse, no reserves. There will be a lot more cushioning for you to fall back on in the event of something happening, because we all know we can experience in our lives unexpected losses, heartache, or some large event that will put us off from trading and earning money. But if we have that cash reserve to give us more time to get our minds right, the better it will be on our psychology and mindset. You also won't naturally have an eager desire to have to make that money back that you lost. Now that we have covered the first concept, let's move on to the next one. Number 2, create your own rules. Now, this is really important. I emphasize the word your. Trading is a very unique and personalized thing. There is not only one way to successfully trade. You have to find your own way and create your own personalized rules to follow, not somebody else's. No matter if it's your mentor or someone you look up to, or a friend or a colleague, you have to make your own rules. It's also going to naturally improve your discipline. You need strict rules to follow. These rules can be a checklist of your entry criteria, exit points, risk management protocols, time zones in which you trade, sessions in which you don't trade, and a watch list of all the pairs that you do trade. Something else that's equally as important is to have a trading psychology plan as well. You will need to be aware of when to stay out of the market. If you're super emotional, whether it's caused from trading or external factors, whether you've had a fight with a spouse, a loved one, a family member, a friend, or if something happened to you during the day that just caused you severe frustration, anger, or feelings of sadness. This is very important, because if we do not listen to these rules, we will take those external events into our own trading, and our trading results will suffer because of this. This will challenge your discipline, but it will also sharpen your discipline. Discipline is the cornerstone of any profitable trading strategy. It means sticking to your plan, especially when you're tempted to break it. If you go against your plan or start trading on a whim, you will develop bad habits like revenge trading or premature exits, which are all costly mistakes. The losses that you will suffer due to lack of discipline is far greater and far worse than those resulting from an improvable trading strategy. To develop discipline, you need to create your own trading rules and follow them diligently to create rules that work for you and you alone. It will need to match your level of risk tolerance and then follow them to the absolute letter. Now let's move on to the next. Number 3, you will need to have a large amount of patience. A large amount. Remember in my last video when I mentioned the success rate of traders is only 10 to 15%. Well, now this point is one of the main reasons why traders fail and give up far too early. In terms of having patience for our actual trades, this is all about timing and making the right decisions at the right time. Knowing when it is the right time to buy, when it is the right time to sell, and also when to sit out and do nothing until your setup arises. This requires self-control and being able to keep your emotions like FOMO in check. FOMO stands for fear of missing out. While there is such a thing of holding on to winning or losing trades for far too long, impatience will drive traders, especially day traders, to get in or to get out too quickly. I know it can be hard to be patient in a world of instant gratification. I used to enter trades that didn't check any of my points on my checklist, and I would also exit trades too early. As you can imagine, I lost a lot of money due to this because of impatience. But once I learned the importance of waiting for the right moment, my profits started drastically increasing. So now you might ask, how does one improve and develop their patience? Well, let me give you a few pointers. Follow your trading plan and your rules diligently. I know I've already mentioned this, but it really is so important. And finally, don't settle for a small amount of profits just because your last 2, 3, or 4 trades were losses. That being said, even with patience, there are going to be times where you will lose money, but that's just a part of business. This is why you must always treat trading exactly like a business. For example, a business owner were to open a store where, let's just use, for example, a tire shop. They need to purchase the tires to then sell to their customers. So from them purchasing the tires, they are going to be out of pocket until they make sales to their customers. That's how we have to treat our losses in trading. So each loss that we have, we must view it as such. You will have to be comfortable with being uncomfortable. Now let's move on to point number 4. This is a really important point. Let go of your biases and your attachment to a certain direction. This is also one that I wish I knew much earlier in my trading career. I actually had this exact point plastered and printed all over my walls in my office because it was something that I personally really struggled with. And that all comes down to ego as well. This was something I also mentioned in my previous video, is that your ego is going to be extremely challenged. And if you don't keep your ego in check, you're going to really suffer. This is something that I still sometimes struggle with, but obviously nowhere near as much as when I first started. We are humans after all, and we are naturally driven by emotions. We all have egos to a certain degree. You should never make decisions solely out of the bad habits you have formed. Gut feelings, biases, or even external influences. You have to always make your own decisions, even if it's someone you really look up to. Bad habits are really hard to break, especially when they're second nature. So make sure to spot them before they lead you to poorly based decisions. One example of a bad habit is to keep taking bad trades, whether they turn out as winners or losses. And if they did turn out as winners, you have to ask yourself, was that because you stuck strictly to your trading plan and it followed all your rules? Or was it just due to luck? Or was it because you followed somebody else's rules? That is developing bad habits. Falling victim of your own personal biases and having too much confidence in that bias can lead to absolute turmoil, both on your trading account and your mental state. For example, holding on to losses for too long to the point where those trades have your account in a huge drawdown, whether it's 20%, 30%, 50%, 80%, even the entire account. That is how stubborn we can be. Even if we know what the outcome will be, extreme devastation. If we lose our trading account, we will not have a vehicle to then create profits for us to live on and pay our bills. So that's why it's so important to always stick to your rules and let go of your biases. We have to remember the market is always right, not us. We have to be flexible with our bias. And as soon as we're proved wrong, we can more easily take a small loss by exiting that trade much earlier to even switching our bias in the opposite direction and then flowing back into the market with a different bias on the same trade. Therefore, we will end up being in the right direction and profiting once again. We will very soon quickly forget about that previous loss. We just won't care about it. There are going to be times when we are wrong. That is a part of business, and we have to be okay with that. Now, finally, the last point, always use strict risk management. Speaking from experience, I have blown enough accounts very early on in my career, so I learned this one the hard way. Please always use a stop loss. Strict risk management will help cut down those losses when they occur. It will also protect your account from losing the entire amount. The risk can be managed. It is essential, but oftentimes an overlooked prerequisite to successful active trading. A trader who has generated a substantial amount of profit can actually lose it all just in 1 or 2 bad trades that don't have strict risk management. Plan each of your trades, starting by having a well-known and trusted broker. Set your stop losses and your profits, or your take profit levels. Anything less than this would be considered gambling. In the very beginning of your trading career, I would always recommend to only use 1 to 2% risk per trade. And then to continue with this mindset is ideal. Although when you are a seasoned vet and have much more experience, you might then look to increase your risk percentage per trade. Another helpful little trick is to move your stop loss to your entry once you're in a certain amount of profit. Meaning that if the trade does, for whatever reason, move against you, you're safe and you won't actually lose any money at all. Trailing your stops as well above your entry is also something that I personally do with most of my trades. Being a swing trader, I'm obviously holding positions for days, sometimes weeks. So I am closely monitoring the trade and following it and moving my stop constantly the deeper I am in profit. So in the event of anything that's unexpected, whether it be in the news or an economic report, and the trade aggressively moves against me, I actually make money when I'm taken out of the position. Although this may and can be very frustrating to see your entire trade completely reverse, at least you won't lose any money, and even better yet, you do still make money from that trade. Your account is 100% safe and is not at risk at all. There are going to be many more opportunities, maybe even the next day, for you to get into trades if they meet your rules. So don't have those feelings of resentment and regret. Why would you be upset if you still make money? Most traders don't make it in this industry, and the fact that you still profited is something to be feeling pretty good about. Now, to sum all of this up, the best way to prevent bad habits and other psychological pitfalls from influencing your judgment is to just plain and simply be aware of it. Be very aware of it. So take time to learn about these many pitfalls that plague traders consistently and look back at them and at your own past results to determine which ones that you actually do struggle with. And it is extremely important. It's a very overlooked concept, but it is something that is very important. Being self-aware of your problems. And the next part is to actually admit to them and then work on them to improve yourself, which will then improve your results. These problems are never really going to 100% go away. Whatever you have embedded in your own mindset is going to usually stick with you. We aren't robots, we are humans, so we're always going to have those natural tendencies. As always, I hope you enjoyed this video and got some sort of value from it. Don't forget to subscribe to my channel and feel free to take a look at some of my other content that I have already created. Stay tuned for more updates, as I will definitely be adding a lot more videos in the short term and the foreseeable future.